As of right now, Tuesday, May 5th, 2026 at 12:23 p.m., BigBear.ai is trading at $4.21 per share. We are seeing a gain of roughly 1.7% in this intraday session as the ticker BBAI continues to hold the attention of the high-stakes AI defense market. The stock has been bouncing between a low of $4.14 and a high of $4.35 today, showing that while there is bullish momentum, the volatility remains a permanent resident in this name. Most people looking at this chart see a speculative play that relies on government contracts and the hype of the intelligence sector, but the reality is much more nuanced. While the crowd is waiting for the next big headline, the actual movement in the stock is being dictated by a massive shift in capital structure and a silent accumulation by institutional heavyweights that most retail traders are completely missing. This creates a fascinating tension because the narrative says BigBear.ai is a high-risk microcap, yet the balance sheet is being cleaned up in a way that suggests it is preparing for a much larger stage. When you look at the recent stock movement, the daily swings have been aggressive. Just this past week, we saw a surge of over 10% on heavy volume, driven by unusual call options activity. This tells us that the smart money is positioning for a specific event. Institutional activity has been a quiet but powerful force here. We have seen firms like M&T Bank and Goldman Sachs significantly increasing their stakes. Goldman, in particular, boosted its position by over 500% recently. This is a massive vote of confidence for a stock that many dismissed after its revenue miss late last year. The trading volume today is already pacing toward the daily average, showing that the interest is not just a flash in the pan. We are seeing a sector-wide momentum in AI-driven defense, and BigBear.ai is positioned right at the center of that heat. Macroeconomic pressures like rising interest rates and geopolitical instability usually hurt small-cap tech, but for a company that sells predictive analytics to the Department of Defense, instability is actually a tailwind. Now, contrast that institutional accumulation with the common retail belief. Most individual brokerage users on platforms like Robinhood or the Fidelity mobile app see BBAI as a volatile meme-adjacent stock because of its history as a SPAC. They expect more dilution and a struggle to find profitability. But the reality is that the company recently doubled its authorized shares to 1 billion, a move that many feared would lead to a massive crash. Instead, the stock rose. This happened because the market is starting to price in the strategic value of that capital flexibility. It is not just about survival, it is about the $250 million acquisition of Ask Sage. This deal is the bridge between expectations and reality. Investors expected BigBear.ai to stay stuck in lumpy, slow-moving government contracts, but the reality is that Ask Sage brings in over 100,000 users across 16,000 government teams. This is recurring, scalable revenue that changes the entire fundamental profile of the company. If you are looking for investment help or exploring various investing sites to understand where the next move is, you have to look at the short interest. Currently, short interest remains elevated at nearly 26% of the float. This creates a powder keg. If the company delivers even a slightly positive surprise in its upcoming reports, we could see a violent short squeeze that ignores traditional valuation metrics. The expectation is a loss of about 6 to 8 cents per share, but if they show that the Ask Sage integration is ahead of schedule, that expectation will be shattered. This is why we see such high activity on the Robinhood app and Interactive Brokers platform right now. Traders are betting on the volatility. Comment below how many shares of BigBear.ai you currently hold, and whether you think the defense sector is the safest place for AI capital right now. Looking at the business model, BigBear.ai operates in a specialized niche. They provide mission-ready AI for national security. This isn't just a chatbot, it's predictive analytics used for force management, supply chain optimization, and federal travel and trade. They have a 5-year Army contract valued over $165 million and a massive footprint with the NSA. This provides a moat that most AI startups simply cannot touch because they lack the security clearances and the decade-long relationships with the Pentagon. While older reports showed a revenue decline of 38% in late 2025, that was largely due to a transition away from lower-margin legacy contracts. The company is intentionally shrinking to grow faster and more profitably in the long run. They are trading current revenue for future margin health, which is a classic move that often confuses the casual observer but excites the professional consultant. As we look toward the future, the catalysts are clear. The main one is the integration of generative AI into their existing federal platforms. If they can prove that their systems are the operating system for government intelligence, the current $2 billion market cap will look like a footnote. However, the risks are just as real. The dilution from the share authorization is a lingering threat. If the company uses those shares to fund operations rather than acquisitions, the stock will likely retest its 52-week lows near $2.96. There is also the risk of lumpy revenue, where one delayed contract can sink a quarter's numbers. This creates a situation where the reality of the business execution must constantly outpace the market's expectation of failure. You see firms like Vanguard and State Street continuing to expand their holdings. It suggests that the floor is rising. The expectation is that small AI firms will be crushed by the giants like Nvidia stock or Apple stock, but BigBear.ai isn't competing with them. It is building the specific applications that run on that hardware for a customer, the US government, that doesn't just buy the cheapest option, they buy the most secure and integrated one. The scenario for the rest of 2026 hinges on whether the company can hit its revenue guidance of $135 million to $165 million. If they land at the high end of that range, the narrative shifts from speculative AI to essential defense infrastructure. This is the tension that keeps the stock moving. Every time the price dips, institutional buyers seem to be waiting to provide support, as seen in the recent activity near the $3.80 level. If that support holds, the path to the analyst price target of $5.50 or even $6 becomes much clearer. In summary, the situation with BigBear.ai is a classic battle between a skeptical public narrative and a strengthening institutional reality. We started today with a live price of $4.21, reflecting a market that is cautiously optimistic but still on edge. The expectations for this company were at an all-time low just a few months ago, but through strategic acquisitions and a cleanup of the capital structure, the reality is starting to look much more promising. The heavy institutional accumulation, the high short interest, and the massive federal pipeline all point toward a stock that is being underestimated. Whether you are using Fidelity wealth management tools or a Robinhood stock trading account, the key is to look past the headline volatility and focus on the structural changes happening within the company. The tension is high, and for those who understand the reality of the defense AI landscape, the opportunity is even higher. Maintain your focus on the contract momentum and the upcoming quarterly figures, as those will be the ultimate arbiters of whether this momentum can be sustained into the new year. Authority in this market comes from seeing the moves before they are reflected in the price, and right now the moves are happening in the dark, away from the typical buzz of the retail crowd. Be the investor who pays attention to the institutional footprint rather than the social media sentiment, and you'll find a much clearer picture of where BBAI is headed. Expectations are the noise. Reality is the data on the balance sheet and the contracts in the filing. Watch those and you'll stay ahead of the curve. This is not just about a single trade. It's about a fundamental shift in how the government utilizes intelligence, and BigBear.ai is fighting to be the primary engine of that change. Stay sharp, stay informed, and always verify the data before making your next move in this fast-paced market. Disclaimer: this video is for educational purposes only, not financial advice. Please do your own research before investing. Market involves risk. Like this video, comment your thoughts, share with your friends, bell sin for more updates.